Alrighty, so Google McDougal. Let's start with this one, okay? I made a big change in regards to Google, and I added it to my potential buys watch list. It's a big step to get added to that list because there's a certain amount of stocks I have on that list, and so now it is official. Google is on my radar as a buy. Okay, it's not just as on my radar as like a stock I'm kind of keeping an eye on. Now it's on my radar as a stock I might end up buying. Okay, now in terms of my possible buys list, that's 18 stocks deep. I try to usually keep that at 20 stocks or under. Now, if you're on that list, it does not guarantee you're going to buy. Sometimes there's stocks on that possible buys watch list that I already own. For instance, look at these two. Wynn Resorts and Nike are on there. I already own both those stocks. They're just stocks that I think are really attractive with their pricing right now that I'm looking to add more and more shares, right? You look at a Whirlpool, I haven't even started a position there, but that one's on my list because it's very, very compelling valuation now at this point in time. The public count is 11 stocks deep. Think about that. I have over $2 million invested in basically 11 stocks plus 2 hedges there. So it's kind of like, let's call it levels, right? In terms of trying to get into the private account, right? Or the public account, I should say, right? It's a huge step in the right direction. It's like Google does 7 rounds of interviews if you want to get a job at Google. And I feel like we're on like round 6 right now at this point in time. Getting added to this watch list is round 6. Round 7 is by round we can call it hired, is if I'm adding you aggressively at that point in time. Now, in regards to Google, here's kind of the max downside and upside for the stock over the next 3 years, in my personal opinion. Okay, so I had them doing about $7 of EPS in 2024. I think is a pretty realistic number overall. So max downside scenario I could see is some sort of massive compression in the PE ratio, forward PE ratio for this stock. Let's say over the next few years, they never get beyond $7 of EPS. I think, like in my brain, that is like worst case scenario for Google. Like they can, like literally over the next few years, they can never get past $7 EPS, and they just are at a 12 PE. So in that scenario, that would be max downside of about 40% over the next 3 years. But once again, that is the absolute worst case scenario I could foresee for Google over the next 3 years. Okay, 40% downside. On the flip side, I see max upside of about 120% for the stock over the next 3 years. And the reason being is I have them doing about $10 of EPS in 2026, right? I think in the kind of the max upside scenario, I think they could command a 30 PE ratio at that point in time, which would be similar to, actually that would be under Microsoft, that would be under Apple, companies like that. But it would mean Google's getting a lot more respect in the market by that point in time, and maybe all the visions of like, oh, Google's, getting eaten and they got too much competition, all these visions that people have right now, maybe those go away over the next few years. And so if they're doing $10 EPS, slap a 30 on it, right? Which is once again, a 30 PE, that's, around where Apple's at, maybe even under Apple, and that's certainly under Microsoft right now. Then you're at about a $300 stock. So which means, we can call it roughly 120% upside or so over the next 3 years. So the way I would look at Google is the further it's under $145, the more attractive. If this stock can be acquired at $135 or $125, then we're really, really talking, because now we're talking about the downside scenario is so much more limited and the upside scenario is really, really attractive. So if anything, it's a stock that I think people should be rooting against going down in the short term, right? I would kind of view it as that, but it's definitely a big step in the right direction. Now, in terms of how I view the most attractive buying opportunities when it comes to the Magnificent Seven, as they've been coined, which the Magnificent Seven is Meta, Nvidia, Microsoft, Google McDougal, Amazing's Apple, and Tesla Tesla, right? How I would view those right now today as the most attractive buying stocks, prices out there, Meta is still the number one most attractive. Even after the massive run it's had, it's still the most attractive of all the Magnificent Seven stocks, in my personal opinion. And it's really not even close, okay? Then from there, I think Google now has emerged as the second most attractive stock in terms of a buying candidate for the Mag 7. I think Amazon's number 3. The thing that's really exciting about Amazon right now specific is they're seeing a nice acceleration in e-commerce business, with a new acceleration in AWS, which is very, very exciting for this company because that's their two biggest business lines, right? Their e-commerce traditional business and then AWS. And the fact that they're starting to see a reacceleration in both those businesses is massive for Amazing's on. And so even though Amazon's, if you look at their PE, their forward PE, it's definitely above where their, let's call it a lot of the other Mag 7s are. It's actually still a relatively cheap stock, especially if you look at its historical averages. The fourth most attractive actually right now is in Nvidia, which I understand there's a lot of worries about Nvidia growth rates, and we'll speak about Nvidia a little later on in this video. But given the growth rates this company's been putting up, and considering the fact that the forward PE right now is in the 30s, that's a little too low considering their growth rates. The number 5 most attractive right now is good old Tesla Tesla. I've even bought some shares. I think that was when did I buy some shares? A few weeks ago or something like that. So Tesla's been, under 200 is pretty attractive. Anytime Tesla could be anywhere near $100, then you're really talking. But even under 200, I think Tesla's pretty attractive. Apple, I think is okay. Obviously their numbers haven't been the most exciting over the past year, but when it comes to Apple, we do know that likely a big iPhone's coming in September, and I think that's going to, mean very good things for, let's just call it iPhone numbers in 2025. So I think Apple at this point in time is okay. It doesn't mean it can't go down in the short term, so do keep that in mind between now and the next iPhone releasing. Mr. Softy, I think, is the least attractive. Obviously, arguably the most stable business model of any of these 7 stocks. But with that being said, the valuation just doesn't make it an attractive buying candidate at this point in time. Okay, so that's the way I would kind of view those. Now, what are the stocks I'm riding with personally? Well, I'm riding with these 3 of the Mag 7, right? Tesla, which I've been riding with for a long time and has gotten me to some pretty good places. Meta stock, right? Which is another one I've been riding for a while, and that's gotten me to some pretty good places. And Amazing's on, which was more of a 2022 into early 2023 buy, and that one's doing me pretty good, right? We're sitting on $293,000 in gains, $638,000 in gains, and then $65,000 in gains there, right? So those are 3 I'm riding with, but if let's say I didn't have money invest in those stocks, I might be tempted to ride more with, these 3 at this point in time. If I was buying with fresh money right now, let's say I didn't already acquire positions, and it didn't have tax implications, all the other complications that go with, already having a position built. So that's kind of my 2 cents on that. I think Google's really attractive, and don't be surprised, especially if Google goes down and we see a Google with the 1.3 in front of it, something in the 130s. Don't be surprised if all of a sudden you hear me starting a position in Google. Don't be surprised at all. Okay, we'll see. The problem is there's a lot of opportunities in this market. There's a lot of opportunities, and it's in more than just tech stocks. There's a lot of small cap opportunities. There's a lot of old sleepy companies that have just been beaten down. Like, remember I spoke about Whirlpool earlier? So there's a lot of opportunities in this market, guys. There's no shortage of opportunities. I can tell you that much. Even some of these stocks that have run a lot, like a Meta and an Nvidia, might be opportunities, okay? So that covers Google McDougal. Now let's talk about Nvidia. This is massive for the whole market this week. I want to share with you if I think they're going to beat, miss, guidance, all those sorts of things. Then we'll get into stock I might sell and some random stock talk, okay? So Nvidia, Wednesday's the earnings. It's coming out after the bell. I will do a Twitch live stream that day. It's going to be massive. On that day, not only is Nvidia reporting, but also Lucid's reporting, and Rivian's reporting, and Dutch Bros is reporting, and I believe Etsy's reporting. So it's going to be a crazy after hour. So I will Twitch live stream that one because it's going to be craziness, okay? So if you want to join me for that, make a note on your phone, on a piece of paper, put it on your forehead, whatever you got to do. Join me for my Twitch live stream on Wednesday, okay? Now, this is everything for the market. Nvidia is still the tastemaker of this market. It is still the one that dictates whether we go much more risk on with this market or about to go risk off in a huge, huge way. It is the one that matters more than any stock in the market right now, okay? So, this quarter numbers are about to report. It's in the bag. The EPS, I think, is in the bag. The revenue is in the bag, in my opinion. I would be shocked, absolutely shocked, if they missed on EPS or revenue. Guidance in the bag also, in my opinion. I think they're going to beat in terms of if they do give any EPS guidance, I think that's going to beat. Revenue guidance, I think that's going to beat as well. Okay, so I think those are in the bag. If for any reason those are not in the bag, oh boy, okay, we're in trouble. For instance, The revenue expectation here is $21.9 billion analysts have for the spring quarter, okay, which is what they'll guide to. So, oh boy, if they miss that, so let's say they report something with a 21 in front of it or under, it's going to crash and it's going to hit the market heavy, okay? If they have some sort of guide with a 21 in front of it or lower, disaster, because at that point in time, people will say, oh my gosh, the AI demand all of a sudden is drying up. This is not good. And all of a sudden you lose a bunch of optimism that was in the market, okay? So we cannot have something with a 21 or below in front of it, or Nvidia is going to go down massively and the whole market's going to go down, okay? Especially the NASDAQ related stocks. Now, if we have a 22, let's say the guidance is something with a 22 billion in front of it, I think the stock's still going down. I don't think it's going to crash, but I think it will go down because people will be like, oh boy, okay, this isn't quite the smash that Nvidia had before. I do believe if we have a 23 or above for the guide for Nvidia, that baby's going flying after hours, and it's going to pull the whole Qs up, everything like that. I think we'll be looking really good. Now, the other interesting thing is if they guide anything in terms of commentary or numbers for the, more like the summer quarter or even the fall time quarter, because at that point in time, H200 should be hitting. And that's, the next generation after the H100, and that chip, is going to be extremely pricey. If you thought the H100 was expensive, wait till you pay for the H200. Then you're really talking, okay? So we'll see if they give any guidance in relation to that. But those are the numbers to kind of keep in mind. 23 plus, the stock's likely flying. 22, moving down. 21 or below, crash, okay? What about a stock like Meta? Where's Meta stock at the end of this week? If Nvidia goes flying in its smash factory, 500 plus for a Meta stock end of week, because that will pull the whole Qs up. It will create a new level of optimism out there, I can tell you that much. And Meta 500 plus, new all-time high for that stock at the end of this week. Even Amazing's on. Amazon, I think, would be like 177 end of this week if Nvidia comes in with the smash factory. So now, in relation to all these stocks, right, if Nvidia comes in, super lame guidance, and it crashes, well obviously it's going to pull all these stocks down, right? But if they come in with the smash factory, it's going to be a lot of fun. And remember what I spoke about with AWS earlier. AWS is seeing a reacceleration in growth. AWS also is going to see a massive demand uptick from AI-related applications on AWS. And so this is just some food for thought. Like, one of the biggest direct beneficiaries of AI is going to be Amazon at the end of the day. And that's going to play out over the next many years. You'll see that and I'm not talking about over the next just 1 or 2 years. This for Amazon is something that will play out over the next decade. With Nvidia, with the chip cycle, that might be a little shorter term in terms of crazy demand and the crazy growth rates. With a stock like Amazon, this is like a next 10 plus years of runway for Amazon. And so this is just a little food for thought in regards to that. What about AMD stock? Well, AMD stock, if Nvidia comes in smash factory, AMD stock will get lifted too. Rising tide lifts all boats, as they say. But the thing I'll say also is Nvidia's eating AMD's lunch. There's no other way of putting it. Nvidia's eating AMD's lunch. I've looked at AMD's numbers the last several quarters, and they are so depressing compared to Nvidia's numbers. Can AMD play catch up later this year? Hopefully. But I'm telling you, they're so far behind at this point in time, it's ridiculous. Lisa Su's done a heck of a job running that company over the years, but it's been, I would say, pretty sad how far she's let Jensen and the Nvidia team outrun her. Because if you look at these two companies' growth rates and the type of numbers they're putting up, they're not even in the same category. Nvidia's blowing it out of the water right now. And so, but at the same time, rising tide lifts all boats. And so AMD could be lifted along with Nvidia. But AMD's got some catching up to do. I'll say that. All right, next one up here. Market pullbacks are opportunities to jump in the Mag 7.
Of the day, opportunistic. Can you tell me why?
What else would you jump
into? In what
into?
ways investors could be opportunistic today?
Yeah, good morning, Contessa. Thanks so much for having me here. I think, February, although February is sort of over and March tend to have these days where stocks just pull back. And I think that particularly for younger investors and just, traders with longer term holding periods, there's been so much money sitting on the sidelines, trillions of dollars sitting in those 5% accounts, which are great. But now you have stocks performing in 2023. So, look what happened during COVID. Look what happened during 2022, massive bear market. So opportunistic, on these days that you get these little pullbacks, have your chance to get into the top semiconductor stocks, the quantum stocks, the S&P 500, whatever it may be, and just plan to hold it for a couple of years. The market works quite efficiently over time. And I just think that, with all the money on the sidelines, there has been FOMO and it's time to get back in, time to get off the sidelines.
Do you think that little pullbacks are a reason to jump into the Magnificent Seven?
It's just so funny to me. Time to get back in. It's like, we're nearly a year and a half into the bull run. Literally. Think about it. We bottomed the market out October of 2022. It's February of 2024. So we're nearly a year and a half into this bull run. And the fact that people are like, let's get back in, now's the time to get back in this market. It's just like, it's crazy how long it can take for people to get confidence to jump back in the pool. My gosh.
I do, because I think that the next 5 to 10 years for the Magnificent Seven are going to be stellar. I think that AI is the engine that's going to continue moving them forward. They're good companies anyway, even without AI, if you just kind of pick them apart. Amazon had a great year. They're picking up on retail spending. They have groceries, they have pharmaceuticals, they have cloud, all of these things. And, every company, Google, they have advertising. They're good, strong, solid companies anyway. And now throw AI into the mix, and you just have this engine that's just going to power so many different technological innovations in the coming years.
You've recently added Amazon. Why?
Yeah, so for that reason, I think Amazon is a well-rounded company. They were sort of a sleeper for a little while, 2022, but I think Jassy came in and just really, shaped up the company. I think they cut costs. They became more efficient. And now they're, starting to win. They have a huge presence in the cloud business, which is expected to, double, triple in the coming years and multiply by 5 in the next decade or so. They have a strong e-commerce business. And again, they're dabbling into healthcare. They're dabbling into AI. They're dabbling into pharmaceuticals, grocery delivery, you name it. So I just think that they're kind of well-rounded and positioned. And then the ad spend is going to pick up there too. So it's an interesting play. And I think it's pulled back enough to kind of get into. It's at a decent price point.
I see that you like IBM for its quantum computing potential. Can we talk about Cruise a little bit and what you see here and what it says about your confidence in the consumer?
Yeah, for sure. So on the IBM comment, IBM is kind of, again, a company that you don't mention when you talk about AI, but they're arguably the AI leader. They've been around the longest with Watson AI. So look at IBM this year. They're going to come out of the woodworks and they're going to end up being one of the top leaders that monetizes on this. So for Cruise, and I often hear you talking about the casinos and kind of what's going on in Vegas, the consumer is spending. They're back out there. We just saw reports from China coming back online. The airline earnings were looking pretty good. The carnivals are looking great, and I think that consumers are really spending in this space. That transition from goods to services really picked up. Wages are stable. Consumers are employed, and that spending continues there. So I think it's Cruise has taken off.
Yeah, it's a little frustrating. Okay, it's a little frustrating. I can understand people wanting to just get in the market now if you haven't really been in the market in terms of like you didn't know how to invest and you're just getting involved and you're trying to figure this stuff out. Okay, I understand that. But for the people that have been in this game a long time, the fact that they've been non-existent for, a year and a half in this bull run and now they're finally ready to get in, it's just geez, do you need a written invitation? What is going on? Appreciate y'all joining me as always. Thanks so much for being here, folks. Thank you for smashing the like. Thank you for being subscribed. And once again, if you're looking to join my private group with the super investors and myself, get access to all my course curriculums, teaching you everything I got up here, then check out the pinned comment down there and we'll see if we can get you in there maybe next week. Much love and have a great day.